So in the coming minutes, I'm going to present you some financial figures. And in this finance section, I will show you the sales, revenue, the cost structure and the spendings, and key numbers and figures. Finally, we'll include a stress test. So let's first talk about the market and the revenue. The total market well, focusing on three markets currently. Namely the Pearl River Delta region, the Yangtze River Delta region, and the Beijing-Tianjin area. The total market size of each area is around 6,000 units for the Pearl River Delta and around 11,000 for the Yangtze River Delta, which is the biggest among the three targets, and 3,500 for the Beijing-Tianjin area. In the first 2 years, we are going to mainly focus on the Pearl River Delta region, and first year we plan to penetrate 0.5% of the total market in Pearl River Delta, and this number will increase 4 times in the year 2, which means we are going to occupy 2% of the Pearl River Delta. Starts from the year 3, we are going to expand in the Yangtze River Delta as well as the Beijing-Tianjin area. Gradually, Yangtze River Delta will become our major revenue source. Apart from this geographical composition of our revenue, we also have got composition in our products. Starts from year 1, at early stages, wholesales of bolts with sensors will be our major revenue source. And since from year 3, data service will replace both sales to be as you can see, since year 3, data service will replace both sales to be our major revenue source. After talking about the revenue, now let's focus on the cost we incur to generate this amount of revenue. I will talk about the initial cost and the cost changes. As we can see from this chart, 60% of the initial investment will be allocated to develop the modularization process as well as the related equipment. And 14% will be directly invested for the R&D. And we will spend another $500,000, which means around 14% to compensate the market and promote our sales. At a later stage, our cost will rise mainly because of our cost in the data service. As the business expands in the data service, our maintenance cost for the data set also increases. This accounts for the major cost rises since year 3. Let's see some concrete key numbers for the finance. The total revenue and total cost for the 5 years. First, the revenue will reach 54 million at year 3 and finally go beyond 110 million. And for all 5 years, the total cost will be controlled within 50 million. And we could break even by simply selling 24 units of the bolts with sensors, and the internal rate of return will be as high as 259%. The payback period is very short, and you can get your money back within 4 months. The NPV is around 135 million Hong Kong dollars, and the capital accumulated growth rate is 80%, which means you can get 18 times growth in 5 years. And the real interest rate we assume here is 1.7%, which is quite reasonable according to our assumptions. And our EPS grows steadily from $3 in year 1, finally arrives at a level at $57 per share. And return of equity on average at 70%. Because of the uncertainty in current macroeconomic conditions, we also conducted a stress test to stress the possibility of the macroeconomic changes, especially the possibility that this crisis won't recover so soon. According to our estimation, the net present value in the conservative case will still be as high as 58 million, and total equity value will be around 71 million Hong Kong dollars. In the best case, we are going to achieve 120% of the benchmark case. The internal rate of return and return of equity is a little bit lower in the conservative case, which the ROA is a bit around 50%, and the IRR is 137%. The payback period is again a little bit longer in the conservative case, which is around 8 months. Finally, after talking all those about finance, I think what investors care most is their return. Besides the normal management buyout strategies, normal management buyout plans will also offer several other opportunities to the investors, namely the IPO, merger and acquisition, private equity, and patent sale. Under all the circumstances, the IPO, merger and acquisition, and private equity will generally give investors a much higher return, which is around 60 times of your initial investment. And under all the conditions, at least you can get 8 times return. Now let's welcome Brad to give you more information on our management structure.